Welcome to the Fintech Times Presents series of webinars. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on all the latest and brightest ideas from the fintech world. So firstly, I'd like to say thank you very much for joining us to watch this webinar. Today, we're going to be talking about the gaps between regulation and innovation. We'd really like it if you could follow the conversation using the hashtag Fintech Times RegTech, and obviously follow us at the Fintech Times. From buy now, pay later to the public adoption of cryptocurrency, regulation is a hot topic. Often criticized as being too slow to keep up with innovation, yet surely needed in financial emergencies, such as the recent Wirecard scandal. We've got a great group of people for today's conversation and discussion. In the panel, we're going to consider the parts of fintech that could use better supervision, but in a changing geographical landscape, how can new regulation keep up with developing financial needs, such as cross-border transactions? There's lots of new changes in regulation will also be considered, such as the PSD2 and the new Anti-Money Laundering Act of 2020 from the US. We're also going to be comparing between regulators such as FinCEN, the Financial Conduct Authority. So I'm really interested and happy to invite our panelists to join me here on screen. So I'm just going to start by asking each of my panelists to give a short introduction. So good morning, Charles. Can you please give me a quick introduction?
Great to be here, Mark. My name is Charles Delingpole. I'm the founder and CEO of ComplyAdvantage. We are a company that produces data and technology around anti-money laundering and anti-terrorist financing. We have raised now nearly $100 million. We have 1,000+ clients, and it's great to be here today.
Thank you very much. Good to have you here. And perhaps next we can move to Jane.
Sure. Thanks, Mark. My name's Jane G. I'm the CEO of Kompli-Global. We are a company that provide software to mainly regulated entities. And similar to Charles, although ComplyAdvantage is actually a partner of ours, we have a remote onboarding platform. I'm also a member of the advisory group of RegTech Women, and I'm the lead for Project Financial Crime at the Emerging Payments Association.
Fantastic. Thank you very much for joining us, Jane. And last but not least, Andrew, give us a quick introduction, please.
Thanks, Mark. I'm Andrew Churchill, and I'm an independent security and financial crime consultant. I've worked for 25 years in the cybercrime space, led the Home Office original task force in 2000, 2001. And more recently, I've been the UK subject matter expert on the EU cybercrime and terrorism programme, work on the Federal Reserve Secure Payments Task Force, and most recently I'm the lead author of the British Standard in Digital Identification and Strong Customer Authentication, which is obviously a hot topic with the SCA at the moment.
Absolutely. Thank you very much for joining us. So let's start off with sort of a general sort of statement I'm going to sort of throw out there, which is, regulation seems to always be chasing innovation. We see it an awful lot of schemes come out and then the regulators are always, 2, 3, or maybe even further behind. Maybe coming to Charles, first of all, what's your sort of take on how that sort of dynamic between disruptive companies like yourselves and the regulators sort of interact?
Yeah, I think fascinating question, and tons of different dimensions that you can kind of interrogate and go into more detail on. I guess in the context of this panel and what we've seen in fintech more broadly in the past 5 years is a kind of Cambrian explosion of innovation, with every single vertical suddenly being attacked and invested in and scaling very, very quickly. So whereas 10 years ago you had a bundled universal bank like HSBC, now you have 1,000 fintechs competing for stock trading or lending or any of those hundreds of different areas. I guess what you've seen then is the kind of concentration of risk and new different forms of technology. As a force, regulation tends to favor very large, wealthy incumbents who can afford to invest very heavily in managing, shaping, cultivating, and then dealing with regulation. At the same time, regulation will protect consumers from losses. I think part of it is a kind of whack-a-mole iterative dialectical process which evolves in response to huge dangers and scandals and risks. So I think definitely in terms of chasing innovation, I think what we've seen is lots of different risks pop up and lots of different concerns, and both in terms of the consumers being protected, but also in terms of the incumbents being protected as well. So yeah, I think absolutely that is a very big trend, and it's interesting to see how that will develop going forward.
Yeah, and moving to you, Jane, obviously similar sort of question. What's your sort of take on the chase between regulators and innovation?
Well, I qualified as a barrister before I took on commercial roles, so I suppose
I wish I'd known that before we started this webinar.
I guess my take on it is that I do recognise, I mean, legislation takes a long time to put into place. I mean, I agree with Charles, it does favour incumbents, it favours large companies. It also quite clearly lags a long way behind the evils that it seeks to remedy. I mean, PPI took years to be recognised as an issue. And if you look at the thousands that have been paid out because of that, I mean, that's just one example of where regulation should have stepped in much sooner. And as we all know, the buy now, pay later situation has been recognised now by the Woolard Review as something which is potentially harmful to consumers, and they are going to address it. But when they're going to address it and how long it takes to get the right legislation in place is always an issue. I think my biggest problem is, and we will get on to talking about the Ron Khalifa review in more detail, but I would like to see the regulators understanding much more about the technology. I mean, there is a skills gap at the moment. I think Charles would probably agree with this, that actually if regulators understood what the technology can do and its potential, particularly in the RegTech market, not just so much in the fintech, then they might be more supportive of it. And I think the difficulty is getting to that point. But I think there are some things in the Khalifa review which will give us some comfort.
Yeah, it's really interesting that, and as you say, I think there's loads of things to unpick that and talk about later on. Andrew, just sort of coming to round that sort of the general sort of concept off around regulation and innovation. What's your sort of take on the situation?
If I start off with a glass half empty approach to this, I think yes, absolutely, the regulations are way behind on any of the innovation, and particularly when that innovation is trying to counter organised crime, for example, obviously, or broader money laundering. If you think back to PSD2, which we are still talking about, getting ready to implement the regulations, well, we kicked off the legislation of PSD isn't working in 2010. In 2014, 4 years later, a document actually gets legislated and is ratified and is already out of date. We still haven't started the implementation process on that. So we are 10 years behind organised crime online. That's the glass half empty. With the glass half full approach, I think we are now beginning to see, certainly through the sandboxes, everyone talks about the regulatory sandbox, but now we've got the digital sandbox underway, which took a slightly loose interpretation as to what techniques could actually help prevent the fraud and scams in particular, as the stream I was most heavily involved in. And then we're now also looking at the global sandbox, which from a UK perspective is another, we'll champion the FCA as kicking off the original regulatory sandbox, but also they're now in the chair for the global sandbox, and that'll be interesting to see how that comes forward, because all of these AML issues that are coming to AMLA later on, they're all global. There's no point having something in glorious isolation in the UK, and I think given that the current situation as to the UK's opportunities, I think on a global Britain piece, if you like, the opportunities are that if we take a much better, more innovative approach to regulation and working hand in glove with the regulators, as Khalifa's review also sort of suggests, then I think we could actually see innovation and regulation go hand in hand, and actually have that sort of safe space for the innovation to play out, and actually try new attempts, new technologies to tackle the problem, to actually tackle the problem, rather than merely having tick box compliance exercises, which has traditionally been the way that regulations emerge.
Yes, as you say, it's a really interesting point, and I'm going to come to Jane for sort of comments on some PSD2 sort of stuff. But it kind of I recalled from when you were introducing, the SCA, the Secure Customer Authentication. It was almost mind-boggling that no consumer knew that banks weren't checking that the account holder's name was the one that they were typing in. And I think that the sort of like sometimes, especially within the industry, we get very obsessed with all of these different things, and sometimes forget also not that the regulators don't have the technical solutions, but also the consumers don't actually know what all the underpinnings and all the pipes and everything does anyway. So sort of thinking about that sort of, Jane, PSD2, it's a great term. Everyone us in the industry knows it's been around for ages. How does that ratify into this sort of conversation, and what's in it for consumers, and when will it be implemented correctly?
It's interesting because I was very close to PSD2 for several years because I've worked in payment services. But now that I'm in compliance, I'm actually away from PSD2. And I would just echo Andrew's comment, which is it's taken an awfully long time to get to a point, and we haven't even implemented all of it by any means. And by the time it is implemented, it will be out of date. I think the other thing that's interesting is that some players under PSD2, I want to say AISPs, the failure to understand whether any of the players actually handle funds, because not all of them do, is an issue, and has been recognised as an issue, because this is again comes back to the understanding of exactly what does that player in the marketplace have to do, and is it providing services which protect consumers, or is it providing a service to the banks and the other financial institutions? So it's terribly important to get an understanding, which quite often people don't seem to bother to do, of exactly what that entity does. But I would say now I'm quite distant from PSD2, and probably Andrew knows more about it than I do, because it doesn't affect me directly in my role at Kompli-Global.
That's interesting. That's good to know. As I say, let's maybe bring it back into a little bit more compliance then, and maybe I'll ask Charles. The Anti-Money Laundering Act of 2020 in the US. I know you've written an awful lot about this already. Perhaps you could just give us a quick overview of what it actually is and what it's looking to try and achieve, and then potentially we can have a discussion about where it might be going, etc.
Yeah, so I think in terms of the overall act, it's probably the biggest change in AML regulation for a generation. I think for me, the kind of signature dimension of the AML Act is the mandating that FinCEN has to be the repository for the UBO data. So basically what that means is that whereas in the EU, what you have is UBO registers, as in post-Panama Papers, the 5th AML directive stated that you'd have open registers across the whole of Europe. In the US, what you have is a mechanism whereby all the small companies have to report to FinCEN, as in the US Treasury, precisely what's happening with their ultimate owners. I guess Bank Secrecy Act 1970 basically stipulated that the sole goal was to collect data, whereas actually right now it's much broader under AML Act. The penalties have been expanded. There are various new advisory groups like the Subcommittee on Innovation and Technology, a Subcommittee on Information Security, and also I think in terms of the victory of the Wall Street banks in this regulation, it's they have to now look at how they can streamline and reduce the cost of AML obligations. So I think AML Act basically was kind of over time the sheer magnitude of the cost and the weight of responsibility built up, and the lobbying resulted in the capitulation of the government to the banks, which basically said, listen, you have to reduce the cost for us. So that's basically what you see in the AML Act 2020.
Interesting. And maybe just coming to Jane quickly, obviously, for your sort of take on it as well. I saw you nodding along quite a bit to what Charles was saying, so I'm guessing you inherently sort of agree, but what's your sort of comments on that?
Well, I think for some time that the contrast between the Financial Conduct Authority's approach and FinCEN is really interesting. I mean, it's not fair for me to just criticise the FCA because their mandate has always been to protect consumers. And they do have a mandate in relation to financial crime, but they, in my book, haven't found it easy to marry those mandates. And I think so they've concentrated on protecting consumers, whereas FinCEN has been much more a sort of body that has listened to lobbying that's gone on and been more enlightened in some ways. You see, I think the public perception of sandboxes and tech sprints is that they have been very good things to do, and perhaps they have. But actually, I would have liked to have seen a completely different forum where the FCA brought banks and financial institutions into the room with a group of RegTech companies and talked about what are the issues that you face and what are the potential solutions that could be helping you and reducing your compliance costs. And I think if that sort of initiative had taken place, then I think the FCA's own report on its tech sprints and sandboxes makes for rather depressing reading because, to be honest with you, those initiatives, whilst laudable in some ways, they haven't unlocked the RegTech potential within the market because RegTechs, by their nature, are not regulated, whereas a fintech, which is providing financial services, is. And those two entities need to be handled in different ways. So the RegTech market is a huge market, lots and lots of players in it, covering lots of different segments, not just financial crime, which is what we address at Kompli-Global. But, you know, the contrast between FinCEN and the FCA, I think the FinCEN have had actually a better, or will, particularly with AMLA, have a better approach than the FCA. And as I said, I think what's critical is to gain a lot more understanding of the way in which RegTech companies can help established players reduce their costs and solve some of the financial crime issues in the process.
That's really interesting. Maybe coming to Andrew, both Jane and Charles there spoke about sort of the differences between the FCA and FinCEN. I wonder, given your experience across the two sort of markets, effectively, you could give us your sort of take on that. I mean, the thing that sort of jumps out to me is the fact that FinCEN is an acronym for Financial Crimes Enforcement Network, which seems to put it very clearly its mandate is on fintech and crime, whereas the FCA, the Financial Conduct Authority, just the pure wording of it seems that the mandate isn't the same. What would be your comments?
Oh, well, indeed, it's, one of the key differentiators between the two markets is that the US has so many more agencies. It is an acronym soup out there. And as you say, FinCEN is very much, yes, it's enforcement. That are effectively more akin to the FBI, whereas the FCA is more probably closely more aligned to sort of prudential regulation. So if you look at the juxtapositioning of the agencies on either side of the pond, from a innovation and regulation section, obviously the FCA had its sandboxes here. The Federal Reserve is the body looking at possible sandboxing in the United States, looking at a specific use case of FedNow, the terminology for what we call faster payments. But then on the global sandbox, it's the Consumer Financial Protection Bureau, who are the US agency, who are the FCA's equivalent. So there is a far more nuanced position in the United States because they have so many different agencies with their specific core objectives. The objectives of the FCA, obviously the Financial Services Bill is currently in the Lords at the moment. There are a number of amendments being put in there to actually give the FCA other requirements to have other regulatory objectives to try and broaden out its scope. Now, whether they will all probably still be called FCA, but hopefully the revisions, and again the Khalifa review refers to these. Hopefully, that some of these new the Digital Economy Task Force or CFIT, to get more acronyms. So we may well be sort of catching up with our American cousins by actually just trying to kick off a few more agencies to actually tackle the individual subcomponents, which I think we all agree would need to be seen to come through in order for that regulatory innovation melding.
Yeah, it's interesting to sort of think about acronyms. There's no better subsector of fintech other than RegTech for acronyms, I would think, which is really good. Charles, coming back to sort of you, just sort of thinking to sort of moving on that sort of concept. I remember sort of being in a round table for the global sandbox. I think it was in Singapore. We had the FCA, we had MAS, and a few other regulators from, without detriment to them, smaller sort of interestingly players. No sign of any US merging in that as well. What's your sort of thoughts on the idea of a global sort of regulatory sandbox?
I guess next week we've got 2 panels with FATF, and I'm on a panel today with the European Banking Authority and an MEP, basically. So I guess like in terms of like global mandates, I think someone this morning mentioned the GFIN network, which is the kind of global regulatory sandbox network. So yeah, I think at least in AML, I'm definitely pro a kind of FATF global approach in terms of money laundering regulation, rather than say having the EU central supervisor dominate everything. I think in terms of passporting and equivalence, I think the denial of UK equivalence to EU has been very problematic for UK fintechs. I think the more we can do to make it easier to launch globally, the better, right? But then at the same time, I think you have to be able to avoid the arbitrage that we saw with Danske Bank in terms of being able to go to the lowest regulatory overhead and then sell across the whole EU, right? So as ever, lots of different trade-offs between lots of acronyms and agencies, and but if anything, it's probably simpler outside of the US because you haven't got the trade-off between OCC licensed banks across the whole of the US versus NYFDS regulators versus BINSEN versus, yeah. So I think if anything, some sort of simple global clarity would make sense.
That's really good, and the whole thing really pushed home the whole point of acronyms as well, which I was really happy about. It is literally just full of it, and I think some of that is potentially half the problems. But coming maybe to sort of Jane, thinking about that sort of global thing. Obviously, businesses now, even sort of, I say even, but even startup businesses that are really starting out, they're global by nature. And this is not about the pandemic or anything, but what that has done is actually, I think, increase globalization massively. So the fundamental problem of being able to look for anti-money laundering indicators and this sort of stuff is surely global as well. So there needs to be lots of people playing together to really be able to do AML properly, I would imagine.
You are absolutely right. I mean, there's no doubt that the pandemic has been a vector for quite a lot of changes, a lot more online shopping, a lot more global shopping too, just because that's what people have done, sat at their computers. But I do think, I mean, there is a problem in coordination. The Khalifa review talks about this country and about how many different bodies there are There's HM Treasury, there's Companies House, there's the Information Commissioner's Office. There's a whole structure of people who potentially regulate, apart from the FCA and the PRA, who are involved in regulating fintechs. So when you come to the global stage, you're right, but we can't necessarily coordinate anti-money laundering that well within our own borders. So the idea, and I completely support a global sandbox, is that instead of allowing the EU to hold us hostage post Brexit by saying you can't passport, we do want a global framework. And one of the very appealing things that we should get onto in the Khalifa review was him recommending that there was a specific regulatory framework for fintechs. And equally, he was suggesting that we have this digital economy task force. Now, I think that many of the Khalifa recommendations are absolutely appropriate for now, and I will be sorely disappointed if many of them aren't implemented, but particularly that task force and creating a centre for finance, innovation and technology. The UK can lead the way in relation to anti-money laundering. I don't have, FATF is a great body. I don't have confidence that FATF is the right vehicle, but I think that we have actually done a lot as a country to set the bar high and to prevent financial crime.
That's really good to hear. I don't think we're going to have the chance to get really into the Khalifa review, but obviously we want to keep that position as being a leader. It's helped obviously with our legal frameworks that have been around for many, many years, and is seen as sort of the gold standard around the world from that. So yeah, why not become the gold standard for AML as well? Maybe coming to Andrew, just to sort of round this sort of side of things up. What's your sort of take on that sort of global thing that we've started, and whose responsibility from maybe an agency point of view is it to sort of take that forward?
Well, from picking up Dan's point on the startup is a global player from day one. Really, doing anything in glorious isolation just does not work in this context. So sessions yesterday, I had calls with colleagues and partners in Sao Paulo, Bangalore, Mumbai, and Cardiff, and guess what? It made no difference. They were all, well, one was on Zoom, two were on Teams, but apart from the nature of the software we were using, it made no difference. And if those projects go ahead, then obviously those will be cross-border payments, which under normal circumstances would be red flags. Why is Andrew sending money, receiving money in from India, sending it out to Brazil, and even more suspicious, sending it to Cardiff? But the AMLA 2020, I think, as Charles has pointed out, is a key driver, and the ultimate beneficial ownership aspect will really come to be a driver. And I do think we have an opportunity there as well for, again, the UK to take leadership. Whether we continue to see a Companies House reform sandbox to come up with ideas of how can we more innovatively drive the Companies House reform. What are those? What weaknesses and vulnerabilities in Companies House systems, or indeed in HMRC systems, are being exploited by organised criminals at the moment, and what can we do, and what can the technology do to help us close those down? And from the budget yesterday, delighted to see the final confirmation of that £100 million for the HMRC fraud task force. Now, clearly, that is not going to be £100 million spent in employing civil servants to sit there and do investigations. That has to be an investment in the technology to actually get this done properly, because there is no way we can carry on with traditional human-based investigations. It has to be automated, and it has to take advantage of all the new technologies, which we see in the FinTech review. So.
Yeah, it's wonderful. I mean, unfortunately, we've kind of run out of time, and it feels like we've only really scratched the surface of the whole conversation. Annoyingly, but I think this is where we need to start the conversation and obviously carry this on as well. I was just going to go maybe to each of you, starting with Charles, to give us a bit of a sort of a final thoughts and a sort of summing up. What's your sort of hopes and expectations for compliance moving into 2021?
So I guess the kind of theme of today was regulation chasing innovation, and some great points from Jane and Andrew. I guess the first one was regulation is where it is because where technology is, and therefore as we invest in technology, hopefully the kind of frontier of what we can enforce should also expand. So hopefully the kind of underlying risks and threats and crimes should be able to be extinguished, if not managed much more favorably.
Wonderful. And then coming to yourself, Jane, for some final thoughts and expectations.
Yes, I'm glad that Charles is sounding an optimistic note, and I think that's appropriate. I mean, I think that things will undoubtedly get better. My sadness is really that so many technologies exist today. I mean, I know I'd just like to mention one thing, which is Andrew's referred to Companies House. We take in Companies House data and actually make it more accurate insofar as we can, and we also overlay it with risk check factors, and that exists today. So if somebody is looking at a company, we actually make the connections. How many directorships has this person got? How many companies operate out of that location? The technology exists now to stop financial crime and prevent criminals being taken on by financial institutions. The pity is that it seems to take a long time for banks and the regulators to catch up. Banks are quite understandably afraid of taking on new technology which isn't approved by the regulator. You can't blame them because they're spending a fortune on compliance. So I do want to see this hopefully at this particular moment when economic crime, I mean, fraud is a third of all crimes. There's a massive pressure in the market, particularly with bounce back loans fraud and all of that going on in the public sector. So the pressure is building for the government and the regulators to address these financial crime issues so they can get back some public money which can be spent in far better ways. So I do hope that pressure leads to some very positive outcomes.
I think that's a very, very valid point. One thing that's happened in the pandemic, the government has been very, very forthcoming with lots and lots of government-backed loans, like CBILS and bounce-back loans, and lots of furlough and everything else. And they've had to rush that out very quickly. Therefore, the whole concept of the financial crime element has not been thought of. As you've said, what we need them to do now is really get on that now to prevent losing half of the taxes and everything else they're going to be reclaiming from us from the budget over the next sort of 5 to 10 years being lost in financial crime. So I think that's a very valid point to sort of make. And then Andrew, just coming to you last but not least, give us your sort of final thoughts on where compliance and regulation and innovation are sort of mixing.
Well, I think again, this is a half empty, half full glass. On the half empty piece, it's obviously been depressing that we haven't seen action coming through more effectively in the past. There's an excellent report which RUSI, Royal Armed Services Institute, published a couple of weeks back now on fraud as a national security threat because of the scale of it. And I think that's always been the case, and it's always been the case that the Home Office have put counter-terrorist financing, critical national security issue. But you put the case to the Treasury as how important is this, or how much are we losing? Well, it's 20, 30, tens of millions. Not important. Now the case comes back and it's a case of, well, how much are we losing? Well, it's tens of billions of taxpayers' money every month coming out on organised crime, taking advantage of CBILS, bounce back, furlough, etc. And clearly, in the budget, as we've seen, it's now being taken seriously. And I think that will, now that we've got that political mandate and the authority coming through from that, I really do think that the regulators will actually be very keen to work with innovation to find new ways of clawing that money back, because, as you say, otherwise we will be paying it back in increased taxes over the next 5-6 years unless we can actually recoup some of those losses.
Yeah, I think, as you say, it's going to be a very interesting next few months to see how all of that sort of not only how we get out into recovery, but also how we deal with the current fraud levels and everything else. I would love to have spoken for probably another half an hour with all three of you. Some fantastic comments, and I really, really enjoyed that. Thank you to each and every one of you for giving up your valuable time for it. It's very much appreciated.